2025 was a year of records for metro mining. And will 2026 be the same, or will they beat it? Here to tell us more is the CEO, Simon Wensley. Simon, it's a pleasure to see you again. How are you?
Hello, Shay. Yes, Happy New Year.
Happy New Year to you. Now, today we are, of course, talking about bauxite, the Bauxite Hills Project in Far North Queensland. Now, I gave some of the good news away that 2025 was a year of records for metro mining. Can you take us through a couple of your notable achievements last year?
Yeah, thanks, Shay. Yes, it was another strong and progressive year. We beat the total tonnes for the year by about 10% from 2024 to 25. So we shipped last year at 6.2 million, about 500,000 tonnes more than the previous year. And most of the months through the year were monthly records, including, for example, December, when we get our more difficult weather. So right the way through the year, we've been demonstrating the increased throughput capacity and output, and indeed, that's also reflected in our cost structure. So very happy to see the project move forward. And we haven't yet released our full year results, but the half year results were an outstanding $120 million of net profit. And I guess demonstrating, I think, the margin and the capability of this operation to really generate returns for shareholders.
You talk about how the full year results haven't been released yet, but I note in your recent announcement that you are sitting on a healthy $57 million in cash. Look, this is a great position to be in. What does this enable Metro Mining to do?
Yes, indeed. I mean, look, the $57 million in bank at the end of the year, I think, to put that into perspective, the second half of the year, we've also been reducing our debt significantly. So that's net of, the debt payments that we've paid. And so the cash from the operations is enabling us to pay down debt and grow that cash. And indeed, our net debt position at the end of the year is only slightly higher than that. So one of my sort of internal targets this year was to get cash in bank and debt pretty close to be in what we call net cash. Didn't quite get there, but we're very, very close to that. And I think what that does is give investors, I think, some surety about, I guess, the strength of the balance sheet. And again, back to this sort of margin generation. The second half of the year, I think, had higher tonnage. We did sacrifice some margin to be able to ship out some of the legacy contracts that have been with us since that second half of 2022. So we shipped over 1 million tonnes of legacy low price contracts in the second half, and that's pretty much all done now. We actually only have one ship of those legacies left to ship in 26. So that'll only be about 7 or 8% of our total first half volume for 26. And so again, that despite all of those factors, we still got almost $60 million of cash in the bank. So again, I think from a risk perspective and from a future forward-looking perspective, that's bodes well again, I think, from a resilience and from a cash generation perspective for Metro Mining shareholders.
Now, Simon, under your leadership, you've certainly taken a measured approach when it comes to driving Metro forward. And I know back in 2022 that you said 2026 was going to be your delivery year. Now, that year has arrived. How's it looking, mate?
Yeah, guess what? We're there, right? So time to really deliver. Yeah, look, so we said in 22 that we wanted to deliver 7 million tonnes. That was our capacity throughput, and we wanted to do that with a delivered cost of US dollars 30 to the market. So that includes freight and includes royalties. So look, I guess we're finalising the budgets now, but as I look at that, we're on track. So that is going to be our target for 2026. And I think almost in every respect, we've demonstrated periods in 25 where we've delivered that throughput, we've delivered those costs, etc. So look, I'm confident that that's where we're going to end up in 26. And again, so that's another, roughly another 10 or 15% increase from last year. And again, that'll mean, record volumes. And as I said just now, we won't have that, the drag of those legacy priced contracts that we had in the second half of 25. So we'll be fully exposed to market price next year. So that will deliver, better margins than we've experienced in the second half of this year.
Well, Simon, I look forward to seeing what this year delivers and catching up with you throughout the year. Thank you so much for today's update.
Yeah, it's been my pleasure.